All right, so in this video, I wanted to show you my dividend portfolio. So I hold most of my dividend stocks in Questrade. If you're interested in Questrade, use my referral link below to get $50 in free commission. So first, I've got four accounts with Questrade. First, my margin account. I've got CSAV, CSAV. This is a cash ETF. So it's really just paying about 5% yield per year. It represents sort of it holds savings accounts really. So it's as if having cash in a savings account. So it's not a regular dividend growth stock, but just a stock that pays an ETF that pays a yield that represents a high interest savings account. I mean, last month we can see it paid 21 cents on $50. So that's about if we calculate that quickly, 0.212 divided by 50 times 12. So it's an annual yield of about 5% exactly. So that's last month, but it changes every month. It's not the same payment every month. And then I've got something similar called the HISA, just from a different company. Same idea, represents a savings account. This one paid last month, it paid 23 cents. So a little bit higher. So let's see how much that represents. So 23 cents divided by 50 times 12, that's 5.5%. So pretty good for absolutely no risk. Next, we've got another cash ETF, PSA.to or PSA from Purpose. This one, same idea. This one paid, let's see how much it paid. This one paid last month 23.23 as well. So also 5.5%. So this is what I have in my margin account in terms of dividends. So next in my TFSA account, I've got mostly Canadian stocks. So first I've got Allied Properties. I've got 150 shares total, but because I have 100 shares and because Thursday the market went up a lot, I thought it would be a good idea to sell a covered call on 100 shares that I have. So I sold the 1850 call for 36 cents. My cost actually on the position is 1850, so it's actually a pretty good strike. Because if I lose my shares at 1850, well, that's what I paid for it, so I'm not losing anything. But I don't think it's gonna surpass 1850 by December 15. I think it's gonna. I think it might. I think it. That's my opinion. I think it's gonna continue to get some downward pressure with all the interest rate news. I think this rally is just temporary. So, anyways, best time to sell a call is on a green day. So that's what I did. It was a big green day. So I sold a call out of the money. That's the best I could do. And I guess just adding extra income from this dividend position. The position itself, the stock itself it pays 15 cents per share. So right now it's an annual yield of 10%. And if I lose my shares at 1850, I'm only losing 100 shares. I still have an extra 50 shares that I'll end up keeping. Or if I want, I can try to roll the cover call if I want to keep the shares. We'll see then, depending on where the stock is. But I knew that I had to do something in that with that green day. Now that 36 cents, if we want to take that into consideration, is in 40 days. So let's do 36 divided by what's the price of the stock right now? Let's say 18. Now divided by 40 days times 365 just to get the annualized rate. So that extra 36 cents, if I could do it every time, that's an extra 18% yield per year. But obviously it's not going to happen every month. But that's what it represents. Next I've got Bell, BCE, telecom stock in Canada. So I've got 95 shares. Average cost is 55, and right now it's at 54. So showing a small loss. This one pays a dividend of 96 cents, and right now it's showing a yield of 7% per year. Not bad. Then I've got BK, Canadian Bank Corp from I think it's from Quadravest. But I bought the preferred shares. It's weird that the preferred shares are actually down. But yeah, so I'm down $9 or 0.9%, almost 1%. Got 100 shares. Can't sell calls on it, but let's see how much it pays. I think it pays the yield's about 8%. So it's a fixed 8%, but obviously absolutely no capital appreciation on the position. All I'm getting is 8% from this position. Next, I've got Bank of Nova Scotia, 57 shares. Average price 62. It's at 59 right now, so I'm down 5%. I'm ready to buy more, but I'm waiting to drop at least 10% from my last purchase price. And I believe my last purchase price was 57. It doesn't show here because I can only see the last month, but I think it's about 57. My last purchase price was 57. So if it drops to like below 54, I'd probably buy some more BNS. Next, I've got CIBC, 80 shares, average price 53. Right now it's at 51.82, down 2%. I'm ready to buy more, but I would need it to drop around 40. I think 45 would be my next purchase point. Next, I've got CMR, which is another cash ETF. So this one last month paid 20 cents. So it's around a little bit less than 5% yield per year. Next, I've got Canadian Utilities, cu.to, 65 shares. I'm actually up 4%. I was down before, but now I'm up 4% with this green market. This one pays a yield of 5.8% right now with the current price. Next, I've got Emara, 40 shares. I'm up 2% on the position, and the stock itself pays a yield, I think, around 5%. Yeah. Well, around 6% now. So pretty good. Not bad. Next, I've got Enbridge. I'm up 2% on that one. I was down on everything, but actually, with the last 2 days, Thursday and Friday of green days, a lot of things are back up again. So Enbridge, up 2%, 23 shares. It pays a yield of above 7%, so pretty good. Assuming all these quotes from all this information from Questrade is accurate. Next, I've got Firm Capital Mortgage, 100 shares. I'm down 2% on that one. This one pays a yield of 9% right now. Next, I've got First Capital Real Estate. This one I'm up 13%. So pretty. This one I just bought recently, actually, October 26th. Um, I'm tempted to sell it because it went up very fast. It's showing a 13% profit already. The yield, let's see what the yield on this is. So the annual yield is 6%. So either I keep it to make 6% per year, or I can take the 13%, which would represent 2 years of dividends. But I'd be missing out on an asset that would pay me 6% for life, maybe, and maybe future capital appreciation. But I don't know. This seems like a really fast a gain in just a few days. I'll think about it. I'll see. Next, I've got, this is not a dividend position, so I won't talk about it. I've got Northwest is a dividend position. I've got 400 shares. I'm getting destroyed on Northwest. Average cost on Northwest is 5.76. It is now at 4.65, but at some point it was below $4. I'm down 19%, as you can see, so pretty high. But I sold a call on a strong green day. I decided to sell a call, four calls at 5.25. So as long as it stays below 5.25 by December 15, I keep the 10 cents. And let's see what 10 cents would represent right now. And so 39 days. So 10 cents divided by my cost is 5.76. So 10 cents divided by 5.76 divided by 39 days times 365. So that would be a 16% yield. If I'm able to do this every time, that's a 16% yield. In addition to whatever the stock pays as dividend, the stock pays right now 3 cents, which represents about 8% yield per year, given the current market price. Next, I've got Plaza Retail, 300 shares. I'm not sure if this one had options. Actually, let's see if it has. I think it doesn't. I think I checked already. Yeah, it doesn't have options, so I can't really sell calls on it. But I've got 300 shares at 3.85. I'm down 3%. This one pays a yield of 7.76 on the current market price. Next, I've got some more PSA, which I had in my margin account, so it's just some more cash ETFs. This one pays about 5.5% yield. I've got TELUS. Here, 80 shares. I'm up 5%. I'm pretty sure it was down before, but now I'm up 5%. This one pays an annual yield of 6%, given with the current market price. Next, I've got TC Energy Corp, TRP, 60 shares. This one is up almost 2% and pays a yield of 7.4% annually with the current market price. And then finally, in my TFSA, I've got ZWK, which is a BMO covered call on US banks. I was down a lot on this one actually, but now I'm up 0.5%. And this one pays a yield of 12% annually, so not bad. And as you see, 52 week low is 15.6. I'm ready to buy more of it at around 15.4. So if it came close to my next purchase price. But the problem is I actually don't have any cash left in my TFSA. I've got a combined Canadian amount of $544. So I don't have that much cash to buy more shares unless I sell something that I don't want. What can I sell? Maybe I can convert one of those cash ETFs. Maybe I could sell one of those cash ETFs and buy some more dividend stocks when they are attractive. Like if ZWK falls to 15, I'll buy more of it, and then I guess I can sell my either CMR or PSA, and then buy some more dividend stocks. So next in my RSP account, I focus more on US stocks just to avoid the withholding tax on the dividends when the US stock is sitting in a TFSA. So I've got Boston Properties. I like this REIT actually. Right now I'm up 13%. At some point I was up more than probably 20%. Then I was down a little bit. So I lost all my profit from not selling the shares when it was up 20%. But right now I'm up 13 and it pays a good yield. This one I like it. It pays 7% right now. Next I've got HMAX. I bought an ETF, covered call ETF from Hamilton. I was totally against it, but decided to give it a try. I bought a 12.7 because I noticed all the financials were down. RBC was down a lot, and I think RBC and TD I think is the biggest position of Hamilton. It was down a lot. It was moving with the banks. My issue with this cover call ETF is obviously that it over time it goes down while the underlyings keep going up. But I felt like it was moving almost in sync with the underlyings that it holds. So I'm giving it a try. I only bought 80 shares. Right now it's up almost 4%, and it pays a good yield. I mean, it pays a yield of 16% right now. So you can't, even if it drops a little bit, well, the yield is pretty good and it's consistent. As long as it can keep paying out that yield, then it wouldn't be a bad position. But that's why I'm just giving it a try and putting in a small amount. Next, I've got JEPI. It's another cover call ETF. This one I'm down a little bit, and I was actually down a bit more. I'm ready to buy more when it drops at least 10% from my last purchase price. This one pays a yield of 9%. Next, I've got Triple M. This one was in the 80s at some point. Now I'm down almost 9%, but I was down more, and I'm ready to buy more if it drops in the 80s. Low 80s, I'm going to buy some more. This one has a yield right now, I think, of 7%. Yeah, 6.5%. Next, I've got MPW. This one's getting destroyed. I'm down 17% right now. I sold covered calls a while back for 7 cents, expiring November 17, so in 11 days. Right now, it's worth 2 cents the covered call. I'm down 17% on the position. Now, the stock itself pays a yield of 11%. With the covered call that I'm selling, I had initially sold it for 30 days, so an extra 7 cents for 30 days on a, a, a cost basis of 6.62. So 7 cents on 6.62. So that's per month. So times 12. So that's an extra 12% yield with the covered call if I'm able to do it every month. But of course, I from experience, I know it's not happening every month. But yeah. And now notice my call is 7, my strike is 7, and my cost is 6.62. So I'm safe. There's no way the stock is going above 7 by November 17th. But even if it does, I don't mind because I'm not selling at a loss. I wouldn't be losing my shares at a loss. Next, I've got Realty Income. I'm ready to buy more. I actually put an order at 45 and I missed it. But I'm ready to buy more if it drops to 45. I'm down almost 2% on the position, and it pays a yield of 6% right now on the current market price. Next, I've got VFC. I'm gonna get out of this position. I'm just trying to get out at a smaller loss. This one dropped. It was trading at $13 before the rally on Thursday and Friday, but I'm down 15% right now on this position, and the yield and I think the dividend decreased because the yield is only 2% right now, and it's so I'm getting 9 cents for this position. So I'm gonna try to get out of it. I don't want to hold this stock. I don't want to hold this position for 2% yield, but I don't want to lose too much either. So I'm gonna get out of it and just put it in a different dividend stock. Next, I've got VNO. This one sadly does not pay a dividend right now. Yield is 0, but I've got so much capital appreciation on it. I bought it at such a good price. I bought it at 13. At some point, it was at 26, and it looks like it's heading back there. As you can see, I'm up 69% on the position. I sold a covered call at 25 for November 17. Hopefully, it doesn't reach 25. I collected 55 cents. It was worth 5 cents, but I wasn't able to close it. I think I would have been able to close for 10 cents, but I didn't want to pay 10 cents to close it plus commission. So I had an order of 5 cents to close this covered call position, just so that I'm not stuck losing the shares at 25 if the stock goes up, if the stock goes above 25 by November 17. Now it's back up to 30 cents, so it's pretty close to what I sold it for. I just hope it doesn't reach 25 by November 17. If it does, I mean, it's showing a great capital appreciation. I could sell it. I will still have 89 shares remaining, or I could try to roll it. I will probably try to roll it and save the shares because I don't mind losing the shares at 25 when I bought it at 13, and it's not even paying a dividend anyways. So I'll just keep, if it ends up going above 25, I'll just keep rolling it as much as I can until I can save it. If I can't save it, I'll lose the shares at 25. If I could save it, well, I still hold the position. It's not paying a dividend yet, but eventually it will, and it will be, I think it'll be a strong position. Next, I've got Verizon's Communications, 60 shares. I'm up 12%, not bad. Right now, it's paying a yield of 7%, so not bad. I've got WP Carry. I've got 34 shares. This one is down almost 2%. It was down more. I'm ready to buy more if it trades below 50. And this one has a dividend of 7.5%. Not bad. Hopefully, it doesn't reduce dividends or cut dividends or decrease dividends. All right. So next here, I bought some Tesla yield shares from Purpose. So this is an ETF that buys Tesla shares and sells out of the money calls. So I like covered calls, but from my experience, it's really hard to sell out of the money calls because at some point you get caught and you end up losing your shares. But if someone could do it better than me, then perfect. Maybe they have a way of, maybe they use technical analysis to choose the right strike that they know will not get breached. Who knows? But the stock, Tesla dropped a lot. This fell with it. So I felt like it was a good entry point, and it looks like it was already up 15% in a few days. I could sell it, actually just take the profit, but it's paying, I think, 35 cents of dividend right now. It doesn't show here. I'll have to go on the website, but I think it's paying around 20% yield. And so it's pretty good if it can do what it's supposed to do. If it can do what I eventually want to be able to do, but cannot do. So why not? So buys shares of Tesla and sells out of the money calls. If you could do this successfully, that would be amazing. Let's just see how much it pays. I'm curious. So YTSL, YTSL. So it's this one here. Let's go on performance and distribution. So last month, October 27th, it paid 35 cents. So 35 cents on my cost is, let's see, and it pays every month, right? So 35 divided by 19.5 times 12. So that's a yield of 21%. So if it continues this way, I can't ignore it. And I think I got in at a good price if Tesla doesn't continue to drop. Finally, in my RESP, which is doing terrible, I got some Firm Capital down 6%. I've got some Northwest down 38%. I've got Teles down 5%. I've got TRP down 6%. And I've got ZWK. I bought one share. I'm actually up 7%, only because I had some cash. Actually, I've got $26 now. I'll end up using that cash to buy something. What should I buy? Maybe I should buy. For my position, maybe I'd buy some. See, everything is up now, so maybe I'll just wait until something drops and buy some more of it. Yeah. For now, let's look at my watch list. Let's look at dividends. Yeah, everything is up. There's nothing really interesting right now. If I go back to my TFSA just to see which positions were down, my biggest losers are NWH and Northwest. Oh, NWH is Northwest. Sorry. Oh, MPW as well, down 17%. I feel like there was something where I was down more than 20%. Anyways, but I don't think I want to buy more MPW right now or NWH. So yeah, I'll see if ZWK drops a bit more, then I'll probably buy more of it in my with that remaining $26. Actually, let's see how much cash I have in my RSP. I've got 3,300 cash. Okay, so I've got some cash. Oh, that's because I sold something. Actually, let's look at this. This is interesting. I actually bought NEP here, Nextera Energy, just because I saw it on a YouTube video. I know nothing about it. Just gave it a chance, and then in a few days it went up to 28. Because I know nothing about it, I decided to just get out and take the profit, and it was a good. It was actually a good trade from 21.7 to 28 in a few days, from October 18 to, where's the time place? Yeah, October 18 to October 26. So yeah, not bad. And so that's probably where the extra cash comes from. And I sold. Oh yeah, I sold Calmain Foods. I'm gonna buy more. It's just that I saw it trade at around $41 and wasn't able to buy it. I missed it. It went, and then when it went back up to 49, I decided to just get out of it, just to re-enter at a better time, because I think it's gonna drop again. That's just my opinion. I've seen it happen too many times. I don't think it's gonna keep going up from here. If it drops again below 48, even 45, I'll buy it back at 45. Although I really wanted to get it at 41, 42. But I will buy it back eventually. This one, let's see how much it used to pay. Oh, it has no more, it doesn't pay a yield. Actually, I will not buy it back anymore. I don't know if this is accurate though. Yeah, it looks like it doesn't pay anything anymore. So if it doesn't pay anything anymore, I'm not gonna buy it back. Let's just double check on a different website. Calmain Foods, investors. Where can we get dividend? I mean, the website should be the best source of information. Right here, it says it pays a dividend yield of 8%. 8%. So probably Questrade is not giving the right information. Yeah, because the website does say that it's still paying a dividend. What would be another good source? Yeah, according to Yahoo Finance, still has a dividend. According to Seeking Alpha, though, there's no dividend payment. So maybe it's not paying the next quarter. So yeah, I'll double check before I decide to buy some more. But yeah, that's my story. All right. So if you have any questions, leave in the comment section below. Looks like Questrade was providing the correct information. So if you want to open an account with Questrade, use my referral link below to get $50 in free commissions. Thanks for watching.